Alright everyone, Cowboy Trades here, welcome back to the channel. So this is looking like it's going to be a very important week for Bitcoin and the S&P 500. Next week as well, we've got the FOMC meeting, so quite a lot going on. Let's talk about it. Now, starting off on the Bitcoin chart on the weekly time frame, you can see we've actually just broken out of this huge resistance which has been in place since the 8th of November. Now, obviously, we would definitely want to see a weekly close above this trend line if you were looking for this to be bullish. We'll definitely keep an eye on this, but in terms of Bitcoin, you're currently sitting just at / above the trend line. For the S&P 500, if we come over to the weekly time frame, you can see once again we're at this historical resistance established on the 3rd of January. Now, coming over to the daily time frame, you can also see S&P 500 is pushing up a bit and touching this trend line. We have actually pushed above this once before, and basically as soon as it happened, you just instantly started to nuke to the downside. So this will definitely be very interesting for Bitcoin on the weekly time frame. Keep your eyes on 22,700. If we do manage to have a weekly close, it's possible we get a little bit of continuation into the next FOMC meeting. However, if you do watch the channel, you do know that trend lines aren't the biggest thing that I'm a fan of. You could look at many times in previous instances, previous bull runs, where you could have been looking at a trend line and saying, oh look, we've broken out of this trend line which has been in play for 133 days in this bear market. You could be like, okay, we've broken bullish, come back for a back test, the bull market begins, and once again this trend line meant basically absolutely nothing. We retested it, even pushed up a little bit higher, made multiple lower highs, and this trend line in the end in the bear market really meant nothing before we did break down into new lows. So I think this could definitely be another situation like this where once again it's likely we have a tiny bit more continuation as we are above the trend line, especially into the next FOMC meeting, which is 9 days away. However, if we come over, check out some of the oscillators and also some other metrics. Let's start off with the Bitcoin mining sell pressure. Mining sell pressure for the past, well, basically throughout the whole of January has been slowly rising up, at least not in a monumental sense. We have made previous videos on the channel where we've looked at mining sell pressure in depth. More often than not, miners selling is a bearish sign. However, sometimes miners have sold and the price has actually gone up to the upside. Most times though, miners start to sell, it's not a good sign. So if we do just put a trend line over where we're currently sitting right now, you can see during most of this cycle we were well, at least for the past year, we've been underneath this trend line for the majority of the time. And as you can see, when we do push above it, miners start to sell over here. You did have a big cascade. Miners started to push up over here. Like I said, not all instances of miners selling means price is going to the downside. You did actually push up to the upside on this one. Over here, though, miners started to sell and price very quickly came back to the downside. So we'll definitely keep you up to date on this. Miners started to sell over here. We broke back down to the downside. So keeping an eye on this, I'll let you know how this plays out. But miners are starting to offload their bags a tiny bit. If we come over to the weekly time frame, clear this chart up a tiny bit, you can actually see that we're round about halfway into the EMA ribbons. Probably at the, between the just above the 40, just beneath the 35 moving average. I'm really not a fan of looking at all of these different ones. I just look at the top two. This is really all you need. But nonetheless, we are historically overextended, especially in this bear market. We really haven't had a bear market rally before, which just pushes up for 1, 2, 3, 4 weeks straight of absolute explosiveness. And this is not how bear market lows are formed. You can see over in 2017, there was a few instances where you had 1, 2, 3, 4 weeks of a brutal run to the upside. Over here, you had 1, 2, 3, 4, 5 weeks of a brutal run to the upside. Over here, you had 2 weeks of a brutal run to the upside. And once again, when people start getting bullish on these rallies, when you start seeing people say the bottom is in, once you start seeing greed come back into that market, that is a telltale sign, in my opinion, of course, from experiencing 2017, that this is not the bottom. This does not look like a bottoming range. In previous bear markets, you don't just make a very quick W and then absolutely explode out of the market. You can see over here, from where this capitulation happened, you can see this range from the top over to the lows here. It took a while to play out. Bear in mind we're on the weekly time frame, so if we're looking at this, you can see, you know, it took 133 days of chopping until you came on that final week. You know, about 140 days later, you started exploding out of this market structure. Now, in terms of, you know, where we've been since we've started establishing this range, if we look over here, you know, we spent absolutely no time whatsoever in this range. And of course, on the channel, we've been keeping an eye on financial conditions, Fed commentary. The Fed are still extremely hawkish. Monetary conditions haven't changed. We've also been looking at, you know, many different metrics which do line up with the fact that the bottom would absolutely not be in at this moment in time. Bull market lows are not established over 63 days, followed by, you know, what was it, a 30-something% pump, 39% pump at this moment in time. So once again, I do believe this is a liquidity grab. If we do come over to this chart once again and pull up the liquidity over on the volume profiles, you can see we've moved up from basically the second VPVR, or at least the VPVR in this range. This was a huge VPVR level, huge VPVR here. And we're also coming up to the, you know, basically the final volume cluster. Like, if we start blasting through this, which I don't think we will do, you know, above 24,300 or so, there's not much room up until we come up to about 28,000. So, you know, it doesn't seem likely to me a lot of liquidity would be needed. We are in a huge liquid area at this moment in time. We're about halfway through the EMA ribbons. Miners have started to sell. And when we do come over to the oscillators, you can see over on the weekly time frame, squeeze momentum indicator has had a massive run up. This is not very typical of a bear market. Over on the MFI, you can see, you know, once again, rejection of liquidity, rejection of liquidity, rejection of liquidity, and we have hit that level at this moment in time. On the weekly time frame, liquidity conditions are weakening a tiny bit as we are exploding up. Stochastic RSI, blue moving average is literally sitting at 100. If you look at the last few times this has happened, right here, this was the top before nuking. Over here, this was another top before nuking. And you can also look at some, you know, minor examples like here, where you got rejected from like 80 points, and this was the top before breaking back down to the downside. This was the all-time high over on the stochastic RSI. This was, you know, a fairly sizable correction over on the stock. If you are bullish now, especially on the weekly time frame, you do have to bear in mind you're probably going to be exit liquidity if you're buying at these levels. Of course, Cowboy family, you know, we bought at 17, 16, 15, 14. Oh, no, sorry, no. We bought at 25, 24, 23, 22, 21, 20, 19, 18, 17, and 16. So, you know, there's some trolls saying that we've missed the bottom. Show me your DCAs down at these levels. Nonetheless, I still do believe the majority of these DCAs that we've had from the 25k range down to 16k are going to become slightly unprofitable in the short term as we do break back down to new lows. Total cryptocurrency market cap. This is where it gets interesting. Bitcoin is pushing up and making a higher high on the lower time frame. However, in terms of the money in the total cryptocurrency market cap, once again, you can see this is not a bottom. Bottoms do not happen this quickly. Go back into previous bear markets and you can see long drawn out accumulations. And you know what this really means is, you know, when we do come down to, if you've looked at like a Wall Street cheat sheet, you can see, you know, anger and capitulation happen at these areas. And because there's no greed in the market, it takes a very long time of slowly moving up. And this is what marks a bear market bottom. Everyone's scared to buy. No one believes the bottom is in. Everyone is terrified. And of course, when people are terrified, when people are fearful down at these areas, that is where you want to be greedy. But coming down to these bear market lows, especially if you're looking at Bitcoin, you know, they said the bottom was in here, they said the bottom was in here, they said the bottom was in here, and they said the bottom was in here. There is still tons of greed in the market right now. We have not seen that final capitulation on the Wall Street cheat sheet. We definitely haven't seen anger. We haven't seen crypto YouTubers just leave the platform. You've still got all the people like, you know, Crypto Call from the moon that were bullish from 69k, still posting videos. Some people like this need to leave. You do need to see anger start to ensue in the markets. You do need to see social metrics, like when you type in hashtag Bitcoin over on Twitter, You need to see bearish metrics come into play before you finally see that anger and capitulation. And we haven't seen that yet. But back over to the total crypto one. So looking at the total cryptocurrency market cap, you can see, we're still making lower highs from the 31st of October. So while Bitcoin's taking a tear, it seems like, of course, the Bitcoin dominance must also be going up at this moment in time. We haven't looked at the dominance in quite some time. Let's pull up the dominance. Kraken, BUSD, Binance. Bitcoin dominance, yeah, Bitcoin dominance is taking a tear to the upside. We've also looked at, what happens in bear markets. If we do overlay BTC USD over on this pane, you can see, typically when the Bitcoin dominance goes on a huge spike to the upside, it has to go on a massive run first for the bottom to be in. Like for example over here, you can see a massive breakout, and this is where the lows were marked. Bitcoin dominance pushed up a little bit further because people were still a little bit scared to buy altcoins, and we're still not seeing that right now. There's a lot of degeneracy in the market still. Bitcoin is pushing up, Bitcoin dominance is pushing up, but the dominance hasn't really had a huge move up yet that is indicative, something like this, absolute altcoin annihilation season. This is what happened in 2017 into 2018, and this absolute, annihilation of altcoins when the dominance was rising was a key signal that the absolute fear and capitulation was in the markets. Now, dominance is rising, however, total cryptocurrency market cap is still making lower highs. Altcoin market cap as well is still definitely flagging. You can see, lower lows and lower highs all across the board. So you do have some altcoins, like KDA, which I do have my eyes on for a potential short. I want to see how the weekly close pans out for Bitcoin. If Bitcoin does close beneath 22,700 this week, meaning that we've got a rejection from this trend line, something like this happens, we break up and we start breaking back down, I'll be looking at Sol shorts, I'll be looking at Gala shorts, I'll be looking at KDA shorts. But for right now, I'm really sitting and observing how this weekly close comes into fruition, especially over on the S&P 500. All very important, but once again, dominance is rising, total cryptocurrency market cap is still making lower highs, total altcoin market cap is still making lower highs. SPX, although it has pushed up a tiny bit in the past few days since we've marked this liquidity top, you can actually see liquidity conditions are still making lower lows. They're actually starting to turn down at this moment in time. And, liquidity is often a leading indicator for price action. If we look at previous tops, there was a top over here on the 28th of November, right here, or just before this, the 1st of December. If we move this one over, bada bing, you can see liquidity topped out over here. We broke down just like we did here, and we actually on this wick, I believe on the E-mini futures, we actually slightly, yeah, you can see it's very hard to see. I have to zoom in. We slightly pushed up and made a new high. So, once again, liquidity conditions are a great indicator of when markets are topping out. They're often a leading indicator, meaning sometimes liquidity conditions top out a week before or a couple of days before. Liquidity starts heading down, price starts heading up, and they do snap back into their correlation very soon. So, like I said, this week is going to be extremely important for the cryptocurrency markets and the S&P 500. Next week as well, on the 1st of February, we do have our first FOMC meeting of the year. I do think we are going to see another 50 basis point increase on this FOMC meeting. If you are looking at a lot of leading indicators for inflation, subsequently like copper futures, live cattle, eggs, etc. We've looked at some of these on the channel, and I will make a separate video on these a little bit later on, potentially tomorrow. But a lot of these leading indicators of inflation are actually starting to head back up. China economy is reopening. That is bad for the US inflation. We've looked at that previously. It means that, once again, US is going to be in direct conflict with China demand, meaning, once again, it's very likely as Chinese goods flood the market that inflation for the US does head back up to the upside. But with all that said, like I said, this week is extremely important for the cryptocurrency markets, extremely important for Bitcoin. Keep your eyes on 22,700. If we close beneath this level, I will be having multiple altcoin short videos out by the end of the week talking about new positions that I am looking to take. Of course, if we do close above this level, it is likely we push up a little bit further, and I'll keep you up to date on that. But for today, that's all I've got. 22,700 for the S&P 500, at least looking at the SPX. Keep your eyes on 4,020 for the weekly candle body close. Extremely important. So all I've got for you for this episode, my friends. As always, if you enjoy the content, let me know down below by leaving a like and a comment. Share the videos with your friends, and if you do want more of my posts, charts, memes, economic data, be sure to follow me over on Twitter at 618_cowboy. For today, that's all I've got. It's been your boy Cowboy Trades. I'm out. Peace.